morning. It's Cory Belyk. I'm CEO for CanAlaska Uranium. We're a junior explorer in the Athabasca Basin in Saskatchewan, Canada, where you find all these high-grade uranium deposits. And it really is the Saudi Arabia of uranium, and we're having a fantastic year, and we've got drilling ongoing right now. How are you, Matt?
I'm good. Good. The Saudi Arabia of uranium. We're going with that one?
Yeah, we're good with that
impressive.
one. Yeah. Well,
on so many levels.
It's the place, Matt. It's the place to be.
Okay. Hey, well, we're here in London at the moment. WNA going on, World Nuclear Association Conference. Why are you here?
I'm here to learn about what's going on in the nuclear space. I mean, this is the place where you get all of these people coming together, utilities, producers, wannabe producers, discoverers like us. And that's where you get the information, figure out what's really going on out there, and what it looks like in the future.
Yeah, I think that's true. Actually, we had some interesting conversations already yesterday and this morning. The nuclear report is out. Lots of data on demand, not a lot on supply. So it comes back to that thing about how companies are positioning themselves for success and what's the reality of the production numbers going forward. So that'll be interesting. But from that, you know how to position yourself. You know how to perhaps to drive a narrative which works for you. So early days for you, explorer. So what does an explorer talk about when at a conference like this?
We talk about what we're trying to do, and that's fill the front end of that production. I mean, if you're not discovering it, you're not producing it. And I think that's really the fundamental issue.
That's not even true. Sometimes you're discovering it and it doesn't get produced.
That is true.
That's the problem with the sector at the moment, right?
So you have to find enough, high enough grade.
Economic.
The Saudi Arabia of uranium. You've got to look in the places where you're going to find these big deposits. And we're a company that's been focused on that for a better part of 2 decades now. And now we're having that success just in the last 12 months. So we're really looking forward to helping fill that front end on discovery and give optionality to the producers down the road to fill what is that large gap.
Right. Just remind people that the business model, because you come from, when you walked in, there was a lot of assets, right? Your portfolio approach, we'll call it, right? And you had to kind of work out how to move each of these assets forward. So you've got a whole bunch of different strategies going. Just remind people new to this story what you did when you came in and what you're planning on each of those assets now.
Yeah, so it was a large portfolio. We've actually been adding to that portfolio, but that's part of our project generation business. So we go out there, we project generate, we develop the ideas, and then we either explore it ourselves, and we feel that it's something we want to pursue, or bring in other companies or other parties' money to help move those forward. So we're aggressively exploring out there, but we're project generating as well to build value for CanAlaska and its shareholders. So what are we trying to do? Well, we're trying to move that portfolio forward toward that discovery, and we've been very successful at that just in the last year. So now's the time to move those forward perhaps more aggressively and get it into this market positioning that is apparently happening in uranium, whereby there is a need for more production, and get that moving. Get that moving. Make that discovery that's going to truly make a difference and literally push out some of the others that are out there known already. So make that discovery that counts. Okay,
so prospect generating or project generating, that's a much longer lead time, obviously, but it's a backstop. It's filling the hopper, right? With regards to exploration, you've got a couple of drills going at the moment on your own projects and elsewhere on JVs. Is that right?
Yeah, correct. So we just got back to West McArthur, drilling that Pike Zone discovery, that high-grade discovery that we announced last summer and continued to work on through the winter, where we've got now 160 meters of connected mineralization, some very high grades, up to 25% locally. So it's looking correct. It's smelling correct, as we talked about last time. Yeah. So we're pursuing that fairly aggressively right now. We've got 2 drills on that target, one right at Pike Zone and one on a peripheral target very nearby that looks correct. Again, trying to build that size, show that it has that potential to be the next Cigar McArthur, that tier 1 asset in the Athabasca Basin. So our partner there is Cameco. So we're right near the McArthur River operation. So it's a perfect place to go out and make a new discovery that's large. Then we've got a second new discovery just announced this spring with our partner Denison, our Moon Lake South JV. We own 25% of that project, and we're going to get back drilling there probably next week.
Okay.
So we're going to have 3 drills turning over the next 2 to 3 months, and lots of news flow for CanAlaska out of the uranium space.
Right, and again, I'm going to make this show about for people who are new coming into mining, coming into uranium. Okay, there's lots of experts who will tell me that I don't know what I'm talking about, I'm asking the wrong questions, but for the new guys, let's talk about Cameco, right? So some mixed messages in the market from them. The share price is doing well, but some mixed messages around production, the timing, and so forth. And it comes back to that thing of where's the supply coming from? Not talking about it, doing it, which is hard, not just for Cameco, across the industry as a whole. So with the drilling that you're doing, yes, some high grades, sort of relatively narrow at the moment, okay? How do you scale projects like that? How do you go hunting for it, sniffing it out, as it were, to show that this can be Cameco's next big project or at some point down the line?
Part of that is doing the right work to actually show it has the size potential. Yes, we have narrow, high grade. We've got a lot of alteration associated with the system. We've got it over a large strength length now, football field and a half connected, and targets that lie within 2 kilometers of that. So if you think about McArthur River and what do you need to see to go, okay, this could be it. You need to see it over several kilometers.
Right.
Okay, so you've got to step out. You've got to be aggressive in your step outs, move out and away and show its potential. You can come back and infill later.
Yeah.
If you're getting connected mineralization over several hundred meters, a kilometer, 2 kilometers, you're starting to talk about a system that is a McArthur type system.
Got it.
McArthur occurs over 6 kilometers, strike length, really. So you've got to be seeing something of that size, and that's exactly what we're seeing at West McArthur.
Something like that. So you get, obviously, the partner, you've got the money to do that. Have they, again, because the markets, we'll talk macro in a second, but just briefly, the market's obviously moving. Spot price over $60, $61, touch $61. It's getting exciting now. It's doubled in the last 2 years. Contracts starting to happen, but it isn't kind of moving full force yet. So are companies like Cameco, Orano, and all of the other kind of big guys, are they getting incentivized yet to actually put the money into projects in Canada, which they've been ignoring really for the last 10 years? Is that starting to happen? Are you hearing about better budgets, bigger budgets needing to go after this?
We are entering the budgeting process, so I can't really speak to next year and our partnerships there, but I will say that what I'm hearing is that, yes, there is starting to be the recognition that there is not enough primary supply coming and the deposits need to be found. And anything you can find that's big, higher enough grade, immediately displaces the others. So that's what we're focused on, and that's exactly what Cameco or Orano want to find. They want to find those deposits that are truly tier 1, and slide into their system or their portfolio or their pipeline of projects and move it forward to production, because there is a problem coming, and it's a real problem. And I've been speaking to it for a few years now that, just in the Athabasca Basin, that production has a finite life.
Yeah.
You've got Cigar maybe 6 years currently known. You've got McArthur in under 15 years now. So you're looking at timelines that you need to know now what you're going to produce into those contracts that are potentially being signed today forward in time. And that's a potential big problem.
But I think it's a real problem. I think there's, as with all industries and as with all markets, there are going to be hurdles that need to be overcome. I think some of them are going to be bigger than others. And that supply component, I'm ramming that message home, because that's everything I'm hearing from people behind the curtain at the moment, even from some of the poster child companies, is not going to be as long a life of mine. It's not going to be as high grade, and it's not going to be as economic as you think. Not that utilities care, but if you're investing in public companies, you perhaps, producers, you perhaps should. Okay, so that's what's happening on the exploration front. Just with the kind of the rest of the way you're managing that portfolio, because you got to stay alive. To be alive, you got to stay relevant. So we know some spin out of some nickel assets in the headlines recently. Tell us about that.
Yeah, so one of the things we did during the low uranium market, as you know, is we went out and developed this incredible district scale nickel portfolio in Thompson, Manitoba. So that's one of the premier nickel districts on the planet, totally underexplored for the last 40 years. So we developed this district scale portfolio. Now we're finding a way to monetize that. So one way we did it was we took some of those projects and we did a deal with Valterra Resources. So they're going to come in and they're going to invest up to $9 million into several projects to move those forward over the next number of years. We're working through that definitive agreement phase right now. Now, just recently, we've announced the spin out of Core Nickel Corp, which will be taking 5 properties, high value properties in the Thompson Belt, and moving those into a new vehicle for our CanAlaska shareholders that can then go on its own, fly by itself.
Right.
And we've just put in a leadership team in place. They're going to move that all forward. That hopefully is done if it gets through the AGM by November. And our shareholders are going to benefit by that monetization or creation of a new company.
Talk me through the the assumptions that you've made around it? Because we've seen a handful of instances where spin-outs have happened and the stock has got crushed. The value of the company is up here at the time of the deal, and now it's like 20% of that now. So you've got to time the market. You've got to value it properly. You've got to do a good deal for your shareholders, right? So that they can benefit from this, and isn't just another disappointment in another market scenario which should have been good, but it's not. It's capitalists come and go, and there's not a lot of people as advertised, right? So with those deals, what was important to you in terms of who you selected, their access to capital, their ability to do what they say they're going to do, and drive and that growth story?
Well, for Valterra, they've got a pretty well-known group behind them, Manex Group. So they've done a lot of deals over many decades. So they're well-rooted and they're able to raise the money. So that's not a concern. It was just a question of who do we want to work with?
Right.
Who is going to bring that money to the table with us? Who is going to work with us to explore these projects and do it the right way and really get them moving? So we were comfortable moving ahead of Valterra for 4 of the properties.
Is operating it?
We'll operate it for them, at least out of the gate. There'll be their option later on, but we're going to operate it out of the gate for them. So we'll be, it'll be almost like a joint venture.
Is that your preference?
Well, you know what it is, actually, in many ways, because we've got the team that can execute. Valterra doesn't at this stage. We've got the team that is very familiar with those projects, so they can execute wisely and move them forward. We've already built the plan over a number of years of we know where to drill. We know where to move some of these projects forward fairly quickly. We're just waiting for the investment to come in, and now it's in. On the flip side, who do we work with for the spin-out? Well, we're going to put some money out of CanAlaska into that because we're well capitalized. That'll get it moving, but we're working on getting it ready to go out and do its first raise.
Right. Explain to me the difference between money, sometimes cruelly referred to as dumb money, and strategic partners. Sounds like you've got a partner who you're saying can access capital, so that's good news, and you guys know what you're doing, so that's good. It's a type of money that's coming. What else are they bringing to the party in the first instance?
In terms of Valterra?
Yeah.
Well, a very experienced management group. So they have done it before. They've gone out, they've raised the money, they've brought it into projects.
Market for what are they doing for you operationally?
Operationally, well, they do have a fairly good technical team as well, but not for execution. So they're bringing a lot of nickel experience to the table, which is good for us.
But nickel, what I'm trying to get at is nickel experience. I said market-facing nickel experience. I said this is how we should frame whatever work you're doing. Therefore, we would like to have a conversation about where you're drilling, what you're drilling for, and what we can then talk to the market about. Or are they, operationally on the ground, let's just have a chat about your assumptions versus our assumptions and move forward. So where do we sit?
It's actually both. Right. I'll be honest, it's both. It's both because it is a fairly strong technical group there as well. So they bring a lot to the table. Yeah. Work with us. We talk about the targets and we move things forward. But then there's the other side where okay, how do we message this out? How do we drive the story? Right? How do we get that enthusiasm that we see and understand out and understandable to the general shareholders? So I think that'll provide a lot of value.
So they're strategic.
They're strategic money.
Okay.
For us, yes.
What else can we expect to see going forward? Because like I said, you're spending a lot of play, struggling with balls. We're not doing what you use to stay alive and relevant. But there's got to be moments that you can monetize or crystallize, or at least ensure you're not diluting the heck out of your shareholders. So any plans that you need to be aware of in terms of the next coming 12 months?
Well, we'll get this nickel stuff dusted. Okay. On the uranium side, we've got a large portfolio, and we continue to look to the similar type of deal, where we can access the capital from other parties to actually move a lot of these projects forward. And we got some big ones in the stream.
Well, that's what I want to ask. Okay, because look at the last cycle, 50 companies to 500 companies, right? Most of those weren't very good. Most of those didn't make any money. We're never destined to produce, and we're always going to struggle. You've got to kind of work out, because again, not all of your projects will be, A-listers, but you've got to pick the ones that you think have got the best chance of success, with the best team, with access to capital, and timing the market right with the right narrative. So a lot of things, and there's more things that you've got to get right there. And there's going to be a bunch of stuff where it's like, hit it and hope a little bit.
So hit it and hope can be with others' money.
Exactly.
right? So that's the project generation stuff.
Yeah.
And we've been really positioning our portfolio back to the Eastern Athabasca Basin area, because we see opportunity there geologically beyond where we may have some of our projects positioned in the West, for instance. So we're moving ourselves back to our comfort zone. We're moving ourselves back to new ideas within that comfort zone. And I think you're going to see a lot of opportunity there to bring in outside parties, other parties, to work with us to move those forward. And that's the key. We've got to find those deals that will allow us to minimize dilution and focus at West McArthur, Moon Lake South, for instance,
Right.
but also move everything else forward at the same time. And I think that's going to be a good thing.
I get it. I'm not really like, well, where do I invest? Do I invest in the company that you JV with, or do I stick with you? Because they're going to spend their money doing this. If it doesn't work out, you get the asset back, presumably. So kind of slightly de-risk.
That can happen. Yeah.
It can happen.
Yeah,
right?
it can happen.
Okay, so let's just think again, explain to people the different types of scenarios and different types of deal structures that you've got available to you.
There's all sorts of deal options on the table, from outright sale, which is not something we normally do, but it's a possibility, to more of an option arrangement where we allow them to earn the outside party to earn an interest in a project. It could be 60%, it could be 80%, depends. We retain as residual generally with a royalty. We take cash and shares along the way. Right. So we as CanAlaska can actually benefit from that discovery through ownership of the other entity. A good example is Basin Energy. We own 20% of Basin Energy. They came into 3 of our newly generated projects. That's turned into a potential $15 million deal. We own 20% of them. If they have any kind of success, we've got a lot of skin in the game with them through that share ownership. So we're along for the ride.
Right, but on the downside, if it doesn't go well, you get the asset back.
Get the asset back?
Right.
Absolutely.
And we go again.
And we go again. Now, they may retain the asset, but, if as we saw, Crux to be a good example where, that post Fukushima events, we actually got that asset back. And now we own Crux East 100%. But it's got 10 years of assessment life on it yet. So it's got a long runway in front of it. And we'll look for partners there too to move that forward. So we've got a lot of opportunity there, a lot of high value opportunity.
Yeah, I guess some people, investors need to see uranium space is understanding the length of that runway and then monetization and growth, creative or otherwise, during that long run up, as it were, to success. So busy is what I'm hearing. Next 12 months, but lots more drilling coming through, it sounds like, and the JVs are all going well. Everyone's gung-ho about the market. So let's talk about the market and why they're gung-ho. So
they should be.
We've mentioned, spot price doubled in the last 2 years. Good news, we're up over 60. Good news. More contracts being talked about and discussed. We've talked about maybe the issue around supply. The demand is definitely there. How do we view this market? Because, some people say, it's like the last cycle. Some people go, well, it is, but it's not like the last cycle. How do you read the next 12 months in terms of what the market has got in front of it?
I believe it is totally different from the last cycle because this has a foundation built around no less deposits or reserves being present, growing demand, which we all know, but I would argue that small modular reactor demand and that whole piece isn't even factored in to that demand curve. So you've probably got a bigger gap than people realize. So I think now this cycle is totally different from the last. The last was truly hype. This one is built on a foundation of clean energy requirements. And nuclear and SMRs in particular are going to be game-changing. And it's just a fantastic event I think we're going to be a part of here. And I wouldn't say just 12 months. I would say we're looking at multi-years in this one. The last cycle was very short-lived. This one I believe is going to be much longer and sustained because we're talking about converting the world's energy supply to clean, much cleaner forms of energy like nuclear provides. So it's totally different.
Yeah, and
it's exciting.
It is exciting.
Yeah.
Saudi Arabia of Uranium.
It is.
We've, don't know how to address you now. Because it's exciting. I think it will be more sustainable, but I think there's a chance of being more sustainable because if the supply is not there, we got problems. So it's very exciting for those who do or can, not so much for the others, and the utilities perhaps are going to get a little bit nervous as well.
The utilities should be getting a little bit nervous, and I think we're going to start to see that in long-term contracting. I do, because security of supply is a real issue, whether it's geopolitical, whether it's market related, doesn't matter. Production curtailments or production problems, as we've seen recently, are potentially game changing in there too. So I think security of supply is the biggest issue, and I think that's all going to unfold fairly quickly in the next 12 to 18 months. And I expect that to be just an incredible run in front of us when that sort of switch goes on. And it's going to be fantastic.
Sheikh Belyk, thank you very much for your turn today.
Always a pleasure.